From crowdfunding to loans, 7 funding options for your business. While there are loads of reasons for businesses in various industries not lasting more than a couple of years, one of the top reasons is lack of money or capital. Cash flow problems can be a major challenge for businesses, especially in the early stages when revenue is not yet consistent. There are plenty of ways to fund your business or startup, from using your own money, to bank loans and small business grants to the not-so-traditional. Here are 7 suggestions for finding the funding to start and grow your business. Grants. A grant is a subsidy that doesn't have to be repaid. Your small business may also receive funding in part or in whole by grants offered by schools, local governments, or privately owned institutions and businesses. Crowdfunding. This method involves reaching out to a crowd of individuals for funding rather than relying on a single institution or individual. This approach can be particularly attractive to individual investors who do not have a lot of money to invest. Sponsorship. If you're running an event, whether that's a one-off event or weekly, monthly event, obtaining sponsorship from corporate businesses is a great way to get the money for your business event. With the sponsorship deals, it's a win-win situation. You get the money you need for your event and the sponsor gets the exposure they need for their business. Angel investors. An angel investor is an individual who provides capital for a startup, usually in exchange for convertible debt or ownership equity. They are usually entrepreneurs themselves and have the experience to help guide startups along the right path. Angel investors provide not just money but also mentorship and advice to help businesses succeed. Venture capital funding. Venture capital, VC, firms might make sense for your business. Companies that offer VC money for business startups often focus on a particular industry. Typically, you need to raise a significant amount of money. Many VCs don't want to get involved if you need to raise less than £100,000 to start your business. Bank loans. Banks and other traditional lending institutions can offer small businesses substantial capital, often with attractive terms and interest rates. If you are starting a brand new business, your bank is likely going to make the lending decision based on your personal credit score. But if you have good credit and relationship with your bank, a traditional bank loan might be a painless way to secure funding. Family and friends. This can be a great way to get the funding you need, while also involving your loved ones in your entrepreneurial journey. While borrowing from family and friends can seem like a no-brainer, it's important to be clear about expectations. This means getting everything in writing and signed by all parties involved. By taking this step, you can avoid misunderstandings and ensure that everyone is on the same page. And while it can be tempting to imagine the best-case scenario when loved ones are involved, it's important to remember that nothing is guaranteed in the business world. Some venture capitalists and entrepreneurs will tell you that you need at least 3 years of operating capital before you start your business. This gives you a solid chance at developing a business that can make it through early growing pains. However, while having enough operating capital is crucial for the survival of a new business, the specific amount needed can vary widely depending on the industry, location, and other factors. So 3 years is not a hard and fast rule, and the amount needed may be more or less depending on the specific circumstances of your business.